Ownership or diversify, that's the choice when you pick stocks versus ETFs. In the next 3 minutes, I'll make this painfully simple so you can choose with confidence. First, stocks. Buying a stock means I own a slice of one company. That comes with control, well, a tiny bit, and a direct bet on that business. If I pick a winner, Apple, back in the iPhone boom, my returns can snowball. Or Tesla before EVs took off. Same thing, but that sword cuts both ways. One bad earnings report, a scandal. A missed product launch, boom, my investment can tank. With single stocks, I'm riding the highs and the lows of one ship in a very stormy ocean. Now, ETFs. An exchange-traded fund is a basket. Dozens of stocks, even hundreds of stocks bundled into one ticker. Instead of betting on one company, I'm spreading my chips across a whole sector, an index, or the entire market. That's instant diversification. It usually means lower risk, less homework, fewer surprises. If I want hands-off investing, set it, forget it. Keep contributing. ETFs make that simple. So what's the trade-off? Stocks can outperform if I have edge. Deep industry knowledge, strong conviction, the stomach to hold through dips, but the volatility is real. ETFs tend to smooth those bumps. They won't moon like a single breakout stock, but they also won't crater as easily. For retirement accounts or long-term goals, that smoother ride can be a superpower, especially when time and compounding are doing the heavy lifting. Dividends. With individual stocks, I may get paid directly. Cash in my account from that company. With ETFs, the fund passes through the dividends from all its holdings to me. I still benefit, and if I reinvest, those payouts buy more shares, fueling compounding over time. Fees matter. Most broad market ETFs have very low expense ratios. Single stocks don't have ongoing fees, but if I churn, trading costs and taxes can bite. Quick cheat sheet. I want ownership and control. Pick a few stocks I truly understand. I want diversification and stability. Choose a low-cost ETF that tracks a market or sector I believe in. I want both, core and satellite. Make an ETF my core. Add a few high-conviction stocks around it. 3 questions to decide today. Question 1. Do I have the time and desire to research companies? Question 2. Can I handle big swings without panic selling? Question 3. What's my timeline? Next month or the next decade? Bottom line. Stocks are ownership and upside. ETFs are diversification and calm. Pick the tool that matches my goals, risk tolerance and attention span. Keep contributing, stay consistent, and let time do its thing. If that helped, save this for your next investing decision. And like and subscribe to SmartMoneyMade Official for more tips. Keep your strategy simple because simple always wins.